Hey everyone, welcome back to Corporate Decoder, the place where we untangle the financial secrets of companies. Today we re-diving into a company that is definitely still finding its footing. And let's just say their balance sheet is a bit of a curious case, so let us get straight to it. Today we are looking at Essence Array Incorporated's latest quarterly report, a 10Q filing that shows us where this company stands as of the 30th of September, 2025. If you appreciate getting straight insights from corporate documents like this, make sure you are subscribed. We also have a Discord community linked in the description below, where we break down these filings even further. This report is essentially a snapshot of the company's financial health over a 3-month period ending the 30th of September 2025. Essence Array Incorporated, which we'll just call Essence Array from now on, is a newer company incorporated in Wyoming back in March of 2024. They're re-aiming to get into the natural health and beauty product market, specifically sourcing European products for the US. Now, let's jump right into the financial tables because that is where the real story is. When we look at their balance sheets as of the 30th of September 2025, we see total assets of $12,429. That is a pretty small number, and compared to the 31st of March 2025, where they had zero assets, it shows some new activity. However, looking a little closer at the liabilities section, their total liabilities are actually $15,950 as of the 30th of September 2025, which is higher than their total assets. This means they have a negative stockholders' equity, or a deficit, of $3,521. This tells us that if they were to sell everything they own right now, they still wouldn't be able to cover all their debts. This deficit grew from zero at the 31st of March, indicating a bit of a worsening financial position in terms of equity. On the equity side, they report common stock with a par value of just $0.001 per S-share, and on the 30th of September 2025, they had a little over 5.5 million shares issued and outstanding. The value attributed to this stock on the books is $5,503. They also have something called subscription receivable, which was $570 at the end of September. This represents money that customers or investors have promised to pay for stock, but haven't yet. Interestingly, this was a negative $5,000 at the end of March, meaning they had received cash for subscriptions but had to give it back, or it was recorded differently. And then there is the retained earnings, or in this case, a deficit. As of the 30th of September 2025, they have a deficit of $9,594. This is the cumulative profit or loss the company has had since it started. Since it is a deficit, it means they have lost money overall since inception. This deficit grew significantly from a deficit of $473 at the 31st of March 2025. Moving on to the statements of operations, which tells us about their performance over a period. For the 3 months ending the 30th of September 2025, Essence Array reported expenses of $2,500. This is compared to zero expenses in the same period a year ago. Consequently, they had a net loss of $2,500 for those 3 months. Looking at the 6-month period ending the 30th of September 2025, their expenses rose to $9,121, again a jump from zero in the prior year's comparable period. This resulted in a net loss of $9,121 for the 6 months. It is important to note that they are not generating any revenue yet, so these losses are purely from expenses incurred in setting up the business. Now, let's look at how these changes affect their overall equity. The statement of changes in stockholder, S-equity, shows a clear picture. At their inception on the 29th of March 2024, everything was zero. By the 31st of March 2025, after issuing shares worth $5,473, they had a small accumulated deficit of $473, leading to a total equity of zero. However, after issuing more shares and incurring losses in the 6 months leading up to the 30th of September 2025, their total equity ended up at a negative $3,521. The issuance of shares brought in $5,503, but the accumulated net loss of $9,121 ate away at that, resulting in the negative equity position. The statements of cash flows give us insight into how money is moving in and out of the company. For the 6 months ended the 30th of September 2025, net cash provided by operating activities was a very modest $629. This positive inflow in operations, despite a net loss, is due to an increase in deferred revenue of $9,750, meaning they received money for services or products they haven't delivered yet. The financing activities section shows where they got their money from. For the same 6-month period, they had net cash provided by financing activities, totaling $11,800. This came from $6,200 in advances from a related party, which essentially means money lent by someone connected to the company, perhaps an officer or director. They also received $600 from issuing common stock and $5,000 from that subscription receivable we saw earlier. Looking back at the balance sheet, their current assets of $12,429 as of the 30th of September 2025 are primarily made up of cash and cash equivalents that were not yet credited to the bank account as of that date, according to the notes. This means the actual cash in hand or easily accessible cash might be less than what is reported on paper. The notes to the financial statements are crucial. For instance, Note 1 tells us that Essence Array is a startup focused on sourcing and distributing natural health and beauty products. They are an early stage entity still building up their operations. Note 2 addresses the going concern issue. This is a big one. The company has not generated any revenue and clearly needs more money to keep going. Management believes they can get financing, but there is no guarantee. The financial statements themselves state that their ability to continue operating depends on raising more capital and becoming profitable. As of the 30th of September 2025, they had a net loss of $9,594 and a cash balance of $12,429, indicating they will need further funding just to manage daily operations and future development. Note 5 sheds light on those related party transactions. It appears the company has been largely funded by its sole officer and director. They advanced $473 early on. And then on the 28th of March 2025, the company issued over 5.4 million shares of common stock to this director for about $5.5 thousand. Part of this was used to cover the prior advance, and the rest was a subscription receivable that was later collected. The director also made further advances of $6,200 as of the 30th of September 2025. It is important to note there is no formal commitment for ongoing support, which is a risk. In the Management S discussion and analysis section, they confirm they expect to need additional capital, likely through selling more stock or debt. They mention their total assets grew to $12,429 from zero, and liabilities grew to $15,950 from zero. This clearly shows they are in a start-up phase and are burning through cash to establish the business. They also state they have no off-balance sheet arrangements. This means all their financial obligations and assets are reported on their financial statements, which is good for transparency. Under the Controls and Procedures section, the company admits that their disclosure controls and procedures were not effective. This means they might not be catching or reporting all important information in a timely manner. This is a red flag for investors as it suggests potential issues with internal oversight and reporting accuracy. Finally, in the exhibits section, we see the required certifications from their CEO and CFO confirming the accuracy of this report. They also have various XBRL documents, which are a standardized format for financial reporting, making it easier for investors and regulators to analyze the data. Now, looking at these numbers more broadly, Essence Array Incorporated is clearly in its very nascent stages. Strengths here are limited. The main positive is the clear plan to enter a growing market for health and beauty supplements, and the fact that they are being transparent about their early financial struggles. They've managed to secure some initial funding, primarily through related parties and stock issuance. However, the weaknesses are significant. Their liabilities currently outweigh their assets, meaning they have a deficit in equity. They are not generating any revenue yet, and are burning cash on operational setup. The fact that their internal controls are not yet effective is also a considerable risk. Without a proven track record of revenue generation or a clear path to profitability, investors would be taking on substantial risk. The reliance on advances from a related party also introduces dependency on that individual's financial capacity and willingness to continue supporting the company. A notable opportunity would be if they can successfully launch their planned product line and capture even a small share of the US market for European health and beauty supplements. The market itself is large and has consistent demand. The risk, however, is immense. Competition is fierce, and building brand recognition and distribution channels from scratch is a monumental task, especially for a company with such limited resources. In conclusion, Essence Array Incorporated is a high-risk early-stage venture. While they have a business plan and some initial funding, the financial numbers reveal a challenging path ahead. Their ability to secure substantial additional funding and demonstrate a clear path to generating revenue and profitability will be absolutely critical for their survival and future success. They need to move from a state of simply incurring expenses to generating income very soon. Alright, that is our breakdown of Essence Array Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they can overcome these early hurdles? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.